Good morning, everyone. I'm Doc McGraw, Options Gelt, and this is the S&P 500 market report and our daily plan. Please click like, subscribe, and let's get right to it. Sorry I'm late. I kind of spaced out a little bit. I saw this and kind of went digging around, tried to get some updates to my subscribers, and took some quick corrective actions to some existing positions, and I lost track of the time. Okay, so let's see what's going on here. I mean, obviously, a big dump here. Let's going to figure this out together. You know what they say, everybody has a plan until you get punched in the face. And you make a new plan, that's all. So let's take a quick look. Where's oil? Oil up. All right. No bueno, right? We don't like that? We don't like that either, right? We don't like VIX doing that. Okay. And so I'm not sure what the headline is, but with oil and VIX popping, I'm figuring it's Iran, right? What could it be? Also, I saw some comments by the various gurus about the Feds buying back the long end that they weren't thrilled with. But and I see the 10-year has kind of popped a little bit. So troubles brewing in the macro space and geopolitical. Okay, so that's what happened. All right. No need to get ourselves all worked up here. Let's see what's going on. Lower stretch. Seeing a little bounce here. Well, that's good. I'll take a tiny victory lap for that if it holds. Our vol traders here. And so let's take a quick look. I'm going to deviate from the normal um, order of doing things. And we're going to kind of get to crisis management mode, so to speak. My gut tells me that this is a buy somewhere near here, and I bought a few flies as we were going down. I also bought some put flies. I kind of just did some quick things. Um, let's take a quick look at Walmart. Walmart also I saw was down 5%. And you know, I'll admit that surprised me. Where the hell is Walmart? I don't have Walmart on this. That's kind of bordering on criminal. Walmart. When I saw they were down 5%. Yeah, look at that, down 10 points. Would I be willing to take assignment to Walmart at below 100? Probably, but that's a whole nother discussion. My gut tells me this is a good place to grab a long. Okay, let's, like I said, we're going to deviate from the normal batting order, and we're going to take a look at what's going on in the options depth. See, we got a lot of sold puts here, 7,700, 76.75, that we've kind of sliced through for now. Let me just make sure that I got the positioning correct.
Yeah,
Anchor
strike just under 7750, where the gamma cluster changes into.
into this. Yep.
Yeah, so just before you cross that, especially on the pre-market, you will generally get a bounce.
Right.
Doesn't
And
mean it will hold, but that switch is difficult to do pre-market.
right. And on top of that, the bullish, so to speak, for lack of a better word, read is this shit was hedged, technical term, at these elevated vols, when there's 16 VIX, just using that as a very rough um, proxy for volatility. Should volatility ease off a little bit and should we move up, then the whole selling hedging process reverses. And of course, but like you said, this is a big toxic level that could have repercussions on both sides. And then we're kind of trapped in this positive gamma that we have to kind of fight our way through to go back up. So I don't know if I would expect the V, but I'm kind of willing to call this a bottom. With a caveat, of course, anything could happen, but this feels like we're bottoming. And I don't even know what the news is, but oil spiked, treasuries spiked, and now everything seems to be coming off. So whatever the knee-jerk algos were, let's see. There's a lot of football left to be played. Okay, and I tend to be a little risky sometimes. Okay, so let's get back to the note. And this was written before all this just happened. Overnight was a narrow range. We undercut 7,700 and reclaimed it. And now we're 76.35, which was the bottom of the expected move from the overnight read. Not a coincidence. Uh, when I did it this morning, which was not, when I was talking about the overnight read, I'm talking about last night. Straddles was roughly 30 points. So that was when we were up around 7,700. So 76.75, 77.35. If we go 1.5x straddle, just rough, kind of where we are. Both rails have features, but they're not the same. And we're just going to try and talk about that briefly, even though, like I said, things have changed. The difference in the features is above 7,700, if we get there, it's pretty kind of clear air up toward the. This was the third. We did past tense have negative gamma up here. Customers long calls that pulled us up. That's no longer here. Whole complexion had shifted. But my point was about the asymmetry. Open air up. Should we get there? Just look at the shape of this. Forget the numbers. Let's just use this as a learning thing. The shape going up is open air two-way ladder. Well, not even a ladder, up to here and then kind of stall reverse. Versus the shape down is positive gamma sticky slog through. So that's what I was kind of talking about. Bitcoin, yeah. So I'm not really sure what's up, but anyway, that's where we are. Now I'm just want to make sure I have everything right here. Expiration filter. Yeah, okay. So yeah, I mean everything looks right here. 76.90 looks like it was added sold. The 76.85s went bye-bye. But this whole cluster down here is staying packed. So from 80.75 lower is staying packed. So that's kind of a supportive area, but sticky to get through. I'm going to go on record saying I would expect to see 7,700 again today. It, okay. We're also going to have to take a look at the at the AM settlement for tomorrow. Okay, so today's the last session before the equity book clears, right? Before um, everybody has to rehedge. So remember, the AM, a lot of those positions are mechanical, not discretionary. So whatever's here and hasn't been rolled is going to be rolled and repositioned however they do it monthly or the next quarter. And so that's going to be happening today, maybe a little bit into the tape tomorrow. Okay, Walmart, I thought was the whole read this week, but apparently we have a little extra stuff here. So I don't know what happened if it's Walmart specific because some of the retail numbers have been good. So we'll kind of parse that out and let the gurus talk about that. Today, QYLD roll. Let's talk about that real quick. So the YLD family of funds, the yield max, even though it's not really yield, uh, sells at the money covered calls for the monthly AM going forward. So that would be for the September AM. They sell that tomorrow on Friday. On Thursday, the day before, today, they buy back just the ones that they sell in NDX, not the other ones for whatever reason, per their um, prospectus, whatever. Fine. None of my business why they do what they do. That tends to have interesting effects, but net bullish. However, the calls were 3% in the money when I looked before, maybe 2.75% in the money now, or even 2.5%. That's still deep in the money calls. They were hedged pretty much with long NQ. So buying back those calls and then market makers having to sell the NQ, it typically ends up working its way out to maybe a slight positive. I know that they say in theory it's not supposed to, but statistically it does. So just passing the news, you can do what you want with it. Race picture, it got better rather than worse yesterday with that whole Treasury buying the long end. But then, like I said, a whole bunch of people have come in saying, hey, buying back the long end is not great. They did the math. Um, and so I think that our Treasury Secretary and the President want to make sure the market doesn't look crappy before the election.
Can
It's,
I say something about that?
sure.
So let's put things into proportion. While this administration is the most actively trading administration in stocks that I ever remember,
Yes.
just look at the Commerce Department's position in Intel and another 12 companies. The operation of long bond buyback was announced a long time ago. It still has six legs to go within that depository, and it interacts in a very simple way. So imagine that your average 30 bond long auction is anywhere between 50 billion to 100 billion to whatever. And the amount that Besant bought was 4 billion. So it's more like a symbolic way of influencing the market in a way that says that we are looking to buy these levels and we think it's an attractive rate, right? But the problem is that on less than 24 hours pass and the market is telling him, fuck you. We want higher
Exactly.
rates
Yep. Exactly. Yep.
for the
Exactly.
next auction. It's not that they think that he's trying to manipulate the market. They know the amount of billions you need to manipulate the market. But what's negative about this is the 12 hours, 18 hours passed, and they came up to the conclusion that the administration is wrong and the rate should be higher. Now, if you still look at the weekly chart of the rates, while we are above five and it's, very, it's something that is being talked about, you see that we're not really hitting new highs or something like extreme, especially on the 10 year. We're just at 4.7. We were at 4.8 not so long ago. So we are climbing up there, and obviously the metals that are the an indicator of the market assuming um, inflation or lack of rates. Right, it can happen if they lower rates or if they don't act, like Walsh doesn't act. So the market is like saying, well, you're generating inflation here, so we're going to run the rates and run the metals. But I think that the negative element is how the market really took only 12, 18 hours and says, well, the rates need to be higher no matter what. You can intervene as much as you want. So that's like, the market doesn't like that.
Okay. And so, and by the way, this is running to November 4th, right around election time. What do I know? And whether it's symbolic or not, we do know that they're going to do what they have to do to keep rates as best they can contained. Under the surface yesterday, the old guard got bought. Netflix, Apple, Amazon, even Google, IGV was up a little bit. Mags was down, was up a little, also 1%. SMH was down 1.5%. Nvidia flat. Healthcare was a big star of the show with Moderna. That kind of spilled over into the whole healthcare section. Uh, and that's kind of where we are. So I just want to make a quick observation about yesterday. This is my server. I meant to put it in, but I couldn't find the chart that I had done it with yesterday, and this is a good enough proxy. So this is the 0 DTE, the heat map for today, taken yesterday at the close. And what I want to point out is, okay, look at where we closed. We had negative gamma right on top of us, pushing us down, if this will charm. And we have negative gamma right below us, pushing us up. And we have this positive gamma pocket, and that's kind of where we close. The point is, the next day's charm or positioning often will steer the pin at the end of the day a couple points one way or the other, along with the weaponized gamma that comes in. And that's something I used to check regularly that I'd kind of just forgotten to look at, or in the heat of battle, I'm trying to get the pin, I'm trying to get the orders in, and I guess haven't been doing it systematically. So I put it in there both to remind listeners and readers and to remind myself that when you're messing around trying to get those flies at the end of the day, it's always good to look at the next day's heat setup, because that's going to be where they're going to have to park. That's another piece. It used to be something I looked at all the time. For whatever reason, I just kind of, whatever, it just kind of fell out of the workflow. So just thought I'd bring that up, and it's in the note, and here it's live on TV, whatever. So I'm on record. Um, it's just, if you're trying to tweak that, you're not sure, that's an added piece of information that can make the difference. Okay. All right. So that's what this whole business is about here. I don't know if I wrote it clearly enough, but that's what I'm trying to say. I couldn't find the chart to put in there to make it more clear. Okay, initial claims, whatever, continuing claims. By the way, should I take my victory nap lap now or later? Remember I said that was the bottom? So we moved 10 points. If you took a scalp when Doc said that, you already made 10 points on ES. Just saying. Just saying. Anyway, and then you get out with paper hands like I do. Not investment advice, it's called. Just a bunch of traders bullshitting. Okay. Um, Walmart, Deer, Bob, I don't know if anybody knows the earnings reaction. I'm very interested in deer because I live on a farm now. I, I used to not know why deer was so important until I moved here. Um, and Bob, I'm kind of curious, but Bob has multiple read through. It has an AI read through, has a China read through, it has a tariff chip read through. So you know, that's one that's interesting. I talked about the YLD. I talked about new covered calls. Okay, so the levels and lines we have to kind of take with a slight grain of salt, but we're kind of coming right back within level. We're kind of coming right back within. I had the bottom of the chop zone here at 85, and we're kind of coming back into where we were supposed to be. Um, I'm surprised, or maybe not surprised, that nobody really tacoed over here. Taco, Trump always chickened out, so nobody really closed here. Let's take a let's just kind of change this a little bit. And I guess kind of curious to see what happened on the put side. Okay, so some puts got closed or bought back. I don't know if the people who sold them bought them back or Vol Trader went in and bought 1,000 puts. That's how he rolls. I don't know exactly what happened here, but some of this closed out. But the stuff here at 75 down here, hands pretty much staying pat, other than a little bit here, which near the money put buying, uh, could come from a number of sources. While we're doing it this way, oh, let me just orient you to what I'm looking at. By the way, previous close. Here's what was here at the previous close. This green box. Here's what was here 30 minutes ago. This tail out here is where it was at its max, all the way out there. So that's what we're looking at here. So interesting, we see previous close 77, 76, 60. There wasn't that much there. Now more stuff has come in. So that's kind of where we are. Let me get the markers off because how we got here is great, but really what matters is where we are. And I like to look at it aggregated first. An aggregated story is between 75 and 7,700, kind of open air. 75 we have to get through, which is kind of where we are. 45 potential pull down through this positive gamma or potential decay fuel pushing us up through this whole big sticky mess. Expect to move right now. Just looking at option chain, I'm gonna guess it's 35, 30, 35. So that would put us up at 77.05 ish. Top from here, and will put us down a little bit below here if we just trust the expected move taken during this time, which is probably just kind of a not a great proxy for what reality is going to be like. And that's it. Like I said, I think we're going up. I see oil tanking. So whatever that was algo overreaction is my take. I bought some bunch of call flies. I also bought some put flies. That's okay. And let's see if I can make some money on that. Go ahead, Val. You have something for us?
Yeah, sure. 1 second. Okay, I'm on.
Okay, hold on. I don't know why it's not showing. Oh, I have to take mine off. Okay. There you go.
Okay, so good morning, August 20. Um, let's start with the main overlays of the chart. So this is SPX. I mainly use the chart on a 1 hour bars. Um, I like the slow moving, more confidence, picture of things. But this is a 30-minute, so we can clearly see the levels. This was done 4 a.m. Chicago, so 5 a.m. Eastern. At that time, the Globex expected moves were for the bracket of the Globex, which is up to 2 hours prior to the market open, was 76.90, 77.40. That was contained. Transition between bearish sentiment and bullish sentiment is 77.20 or so. We never were able to breach that overnight, as you can see. It was consistently rejecting the market. Um, so the band is 7715 up to 7725, with the 20 being the zero GEX for the zero DTE, as I see it. And the expected moves, as I calculated them early on or by the end of yesterday, are 7660 to the downside, which we just tagged pre-market, pretty rare. So generally brings that brings some mean reverting. Now, it generally happens because if you need to guess, where would you optimize your short take profit pre-market? Then if it's early on, you would use the Globex expected move down. But if it's closer to the market and the market is trending like it is today, then obviously the expected move would be a classic point where it's a best guess, right? So you get that effect, but like I would say, 98%, 97% of the time, we don't reach the bands pre-market. Um, what I find interesting today is that the bands expanded relative to yesterday. So yesterday, the upper expected move was 7745, which turned out to be the high of the day. Everything, by the way, is posted in my channel, so anyone that wants to look can just scroll back. And today they got kicked up. Now on my end, the model of the IV jumped 5 points. So we ended the average IV at the money for August 2021. We ended yesterday at 10% or 10.4. Today is 15.5. So an expansion of 5 points, you get that expansion of the bands, and the market is trying to accommodate for that range expansion. Now, let's go over another couple points here. So this is the gamma curve models. You see they cut off the zero exactly at 20. So that gives a good confirmation about that transition from the OI. And we can see that we peak around 76.70, 76.65. So that's where you will get some short covering pre-market, and maybe after some weakness in the opening in whatever 30 minutes or so, we'll get some additional short covering from the actual session. But it's not that I think it's over or the market can just bounce back up. I'm open to both ways, and either way, we have that nasty sentiment this AM. Um, the thing that, for some reason, really captures my attention and is yet to be seen if this is foolish or not, I see the Nasdaq and the X cash, right? That everybody has that in trading view using the SpreadX provider. So it's a continuous cash implied index by the future, and it has very strong support around 29,200 down to 29,100 or so. I think we just hit that, and this comes from August 6th. Now, from a basic technical analysis perspective, which I don't consider myself that proficient, I think that level is a potential low of a range. So if we happen to hold that level on a closed basis, meaning by the end of the session today, tomorrow, I think they might be able to hold the market and actually surprise to the upside. So I'm very aware of that level. We track it closely. I want to see what happens. So obviously today we're getting the buyers not because of that level, just because the SPX did a large move pre-market and happens to be around those levels. But I would recommend everybody have an alert on those levels or be aware of them every time, anytime you look at the NDX and see how the market interacts, and especially as long as the daily and by tomorrow's close, the weekly bar holds that level, right? Closes clearly above 29,200. If that happens, I think the market is trying to say that while it looks that it's about to drop a cliff, right, and we just started what would be considered a downtrend within the move that started at the beginning of August with those short squeeze with the inverted skews and all. Um, so I think it's pretty important to be aware of that. And we'll see how that develops. Now, one more thing interesting. For some reason, yesterday the trading was actually positive. So people were actually very complacent about how the market will hold into today and tomorrow. And it's also pretty apparent by the positioning. You have the whole set of 7,700 or even more down to 7,650. It's all short puts, short
Yep.
puts
Yep.
from a customer perspective. So why would you do that unless you're very comfortable at a 10% IV annual for the next 2 days, right? You're very comfortable. It's not one, like it's not a random short put. It's like all the puts. Now, this is something I mentioned in the past. From my experience, back when we were doing market making in Europe, we would not consider long gamma on our book from short put positions on the customer book as we would consider long gamma on our book from short call positions on the customer's side.
Say that
We would
again.
do,
How come? What was the thinking behind that?
so while the gamma profile is gamma and mechanically is the same, if the market maker is long puts, the market is going down, he's generating more and more negative gamma, he will
Right.
buy futures. Of course, the mechanics are the same, but the way we would express the difference relates to the fact that when you're short put, you, I, me, anybody, not the market maker, are
Okay.
short put under the market, right?
Right.
And they are decaying slowly. And suddenly the market goes boom into those puts, all the profit went away. And now we're basically just getting more and more long delta as the market is going down as
Right.
customers. And we don't like that. They're more edgy. They react. That's why you get that fast flush. Once the market broke the 76.80 this morning, you get that fast flush because they don't want to play around. They were very complacent yesterday, selling puts. Suddenly this is melting in their face. They they react fast and there's a liquidity issue in the pre-market, right? So they don't have all the with the stocks. There's very little liquidity, and so they go to the future. Everything happens pretty fast, and so, as market makers, the way you would express that, and again, this is from my experience in different markets, right? European style options, of course, dividend adjusted indexes. So uh, it's more Black and Scholes models rather than phenomenal or GARP. But either way, we would increase so we would shorten the the time brackets or the delta bracket to hedge because we would expect the customers reacting faster. We would also adjust the hedging pace.
So you
Or
adjust your band, so to speak, your tolerance.
yeah, so for example, if we would have it say every X delta or every 15 minutes or whatever, um, if this would be long gamma due to mostly calls short on the customer side, when they're put and those puts suddenly go in the money fast, we would shorten that to 3 minutes
Right.
and the delta would be much smaller. So everything reacts faster when the customers are trapped into this huge band of short puts, and that's why you get this flush, and it doesn't seem to stop until you reach some point that, whether you're aware of it or not, the market bounces. Um, and I won't be surprised if the market actually does another dip lower to either the pre-market low or even a bit lower at the open. We'll see, and we'll see how this recovers. But either way, what's interesting is the symmetry. So the chart that you're seeing is pretty symmetrical, right? You have this red bar at 7,700, which is similar to the red bar to the green one at 7,745. You have this 7,760 green, which is similar to the 7,675. Pretty symmetrical, interesting. And I honestly wrote that the market seems more range bound versus yesterday, where I was very bullish and we got that spike pre market. Um, and so I think everybody's a bit surprised today because all the data shows that they thought this is a nothing burger day, but they got this surprise in the pre-market. So a bit of action now on the. Also found interesting is the candy wrap on the Qs. And again, I remind everybody that you multiply the QQQ by 41.05, you get the Nasdaq cash, which you could adopt levels from Qs and overlay them on the Nasdaq with that multiplication. This is clearly like you can see the bands like squishing, contracting at 719, right? You can see that they were very wide. The market could move a bit up, a bit down, but they came on the Nasdaq. They came very skeptic to the upside, and the two nearest support levels are 711, which I think we are trading now, and 704. These are where the bands contract above the average fluctuation, especially because of the blue line spiking towards a zero. And
Let me ask you a question because somebody had asked me. What do you see as a level for the Qs, say out in time, out to September, that looks like a solid level?
so, again, the levels I mentioned right now are the ones I'm focused on. I see that 29,200 down to, say, 2,900, right? Right now, where we are now, I see as a critical level, meaning that it can hold a bearish story in a bearish atmosphere more than bears expect, and then eventually bounce back up 1,000 points. So as long as we don't lose this 29,200, 2,900, sorry, 29,200 down to 29,000 on the NDX. So if you divide that by 41 spot oh 05, you'll get QQQ. Let me do that. So let's say 29 100 divided by 41 spot oh 05, you'll get 708. So let's
Okay.
say a level on the Q around 708, give or take 1 point
Okay.
each side. Now, first of all, this will be the level for this week, right? Until tomorrow. As long as that holds, um, I think that is the controlling level. And if that breaks, then any whatever Fibonacci tool or whatever you want to use, because what you have to the left from the beginning of August is just a straight line up when the skew was inverted and everybody was short calls, right? So any guess would be maybe the previous all-time high or something that you can find on the Qs when you look left, right, towards the beginning of August, end of July. Um, so we're hitting those bands right now. If I go into the trading view thing, where is it? Here. So if we look at the trading view SPX, so obviously I don't change the levels, stay as they are as I post them. And we're hitting that first expected move down, 76.60. We might even do 76.40, but I think by then you'll have an oversold situation. If there's no real flow to the downside, that will be it. The market will try and restabilize itself. I don't know if it will go up or not, but a bit hard to crack through all that right away without some really negative, much more than what they had 2 days ago when they said that the new AI Chinese model can run 2 trillion 70,000 billion parameters on a fucking one stick 8 gigaram of memory, right? Which is not good for the US. But I saw that he increased the tariffs on drones today or yesterday. So, this is an administration that is very protective for the industrial complex, whatever industry it is in the US. And they will do anything they can to try and push back on any narrative or anything surfacing like that.
It
Either
will
way,
be hard. It will be
yeah.
hard to fight through the positive gamma above us. Also,
Today you mean?
yeah,
Oh yeah, yeah. I'm not like we need really, really good news, some taco style, things that Trump really excels at. I don't know if the market is not that down for him to come out
right,
and
right,
throw a
right, right.
nuke
It's
and
one
throw a nuke
percent,
on the
whatever.
tape,
Yeah,
right? Nothing is really happening from his
right,
perspective.
right.
So we'll see how this goes. But as long as we hold those bands, the 7660, 7640, the market doesn't have a lot of downside and it will restabilize, just above that 7660, and we'll see how that works. Now, on the other hand, correct me if I'm wrong, we have all those open interest puts down there. And if this doesn't continue to materialize and more strikes going into the money on the put side, um, we're gonna get that charm effect by the end of the day. So this is the open interest surface of the SPX for today. You can clearly see a section between 700 and 7750 where you have little relative open interest and pretty balance between calls and puts. These purple bars and green bars, right? Try to train your eye not to see all the rest. But going left, and we're trading right now around say 76 50 or so, right? 60. So you still have a chunk of puts down there that if you don't get them in the money, so every hour that we just play around 76.60, these will immediately start affecting as buying forces to the upside, and will just reinforce those 76.60 down to 40 as very strong floors. And so the market can just get stuck right
Yep, we're
here
stuck in there.
and
Yep.
see how it works. But either way, uh, we'll see how that works. Let's assume that they took most of the stop loss. There's another chunk of stops that will kick in because of those short puts, customer side at the open. But by the end of the first 30 minutes, we'll probably get a better view. Maybe by the end of the hour, we'll see. Market can go flatline like it did yesterday.
Let's look. I want to jump on here. Let's take a quick look at one more thing, and then we're going to run. Here's the
Tomorrow,
A. Here's the AM expiry. Here's the AM expiry. Ah, come on. Why is it not letting me do that? There we go. Here's the
this
AM.
is just tomorrow morning,
Tomorrow AM only. Right.
right? So we have long calls sitting at 66.50 on the customer side, right? And
We have a
that's
synthetic long. We could call it right here at 76.50.
yeah. And but even if you net out the gamma, so it's pure long, it's pure short gamma on the market maker because the green bar is larger than the red one.
Okay, here I'm gammaing it up here. So here's where we turn it into gamma.
No, this is not
If
gamma,
yeah, I just made it gamma.
but it's not. Now it is.
Yeah.
Right. So you see that section is still netting out to positive gamma on the customer, meaning long calls mainly. We saw green bars and short gamma on the market maker side. But either way, this is not such a bullish setup, right? Now, on the other hand, you don't have a lot underneath, so there's not really any fuel that can help the market continue lower. This has changed. What is it? It's the same AM expiration.
Yep.
Oh, okay. This looks a bit different. Okay. Oh, you shrunk the range. Okay, I get it. So yeah, just underneath that green section of the short gamma the one around 76.50, just under that, when you net the gamma out, you basically have nothing
Got nothing. Right.
starting right
Right. Yep.
76.40 or so, and underneath you basically have nothing until you drop to that lower section at 7600. But who knows? We'll see how this works out. Especially the opening, we'll see. How much panic or short cover or stop losses are going to kick in, and if they haven't done so enough pre-market, we'll see how that works out.
Okay, and that's pretty much it. And I agree. We have to see how this plays out, hedges out, and all that. Plus, I don't even know what the headline is, but I'm guessing it's oil and rates, the same two stories. I think the rate story is even independent of oil to some degree, because like Carl said, there was mixed reactions to that announcement. People are taking out their pencils and doing the math and saying, "Wait, this doesn't really add up," for a number of different reasons. I've seen lots of different ways to interpret what's going on here. So that's basically it. So everybody, be careful. We still have these puts here. I don't know. Let's see how this shakes out. Will be interesting. It'll be interesting to watch the early morning flow, which we get in the flow channel. I don't know. I wonder if we got anything already. Intraday flow? No, it was yesterday. Okay, so no intraday flow here yet.
What
Okay.
what do you get here in this channel?
Um, real time intraday flow.
So like
And
big trades,
yeah, we have
kind of.
like big trades like in the zero DTE trades. So like, whatever it was. So yesterday at 9:40 a.m., iron butterfly came in, or iron condor came in, or whatever. You're not gonna get every little trade, and then here we kind of chunk it by time. And this is done manually. The flow owl does it himself. He goes in there and he, kind of pulls the data, puts it in a spreadsheet or whatever.
Okay,
So that, this is one of the most underutilized channels, I think. I mean, I'm always looking at it, but I,
maybe you can let him whenever he posts something. Maybe you can let him
yeah,
narrate
he puts
narrate
an
some
alert
stuff.
sometime. He puts an alert sometime. Sometimes, yeah, maybe we should make like at least once or twice a day an alert, or if it's a really big
Yeah,
trade, an
if he
alert.
sees something interesting, and
Right, 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 right. Okay, everybody,
bye bye.
very
Good
good.
luck.
And let's take a final look at where we are. And that's good feedback. They're hard for people to read. Um, Let me think about how we can make it a little more intelligible. And so here we are, kind of trying to fight through that. We have that market maker long above, so that's what we have to fight through. And my my crew, I'll see in the Discord. Everybody out there in social media land, like, subscribe, comment, and all that good stuff. And see you tomorrow for OPEX.